Think Realty Nation, it's your host, Abhi Golhar. Welcome to the Think Realty Podcast. A good one lined up for you today. We'll be talking about Huntsville, Alabama, and maybe another city or two if we have some time, doing a quick little market update and recap. That'd be really good for you. And then we're also going to talk about the turnkey real estate investing world and the 5 things you need to know about turnkey real estate investing. And of course, how real estate investors can make more money flipping houses. That's what's coming up on today's show. It's a show you don't want to miss. This podcast is brought to you by Roofstock. If you're ready to buy your next investment property, then check out Roofstock, the #1 marketplace for buying and selling single-family rental homes. Featuring tenant-occupied rental properties for sale in over 20 states, Roofstock makes it easy to invest in cash-flowing real estate outside your local market. And to help you invest remotely with confidence, all properties are backed by Roofstock's industry-leading 30-day money-back guarantee. Sign up for free today to find your next cash-flowing rental property at roofstock.com/thinkrealty. So let's dig into Huntsville, Alabama, shall we? Home to NASA. NASA's Space Flight Center is based in Huntsville, Alabama. And if you remember, back in the day, it was a Saturn V rocket that was developed at the Marshall Space Flight Center, which allowed Neil Armstrong and Buzz Aldrin to walk on the moon. Way to go, Huntsville. Love that piece of history there. Huntsville is the 4th largest city in Alabama and has a metro population of roughly about 455,000. Median household income in Huntsville is $58,000 a year. Unemployment rate, 3.5%, which quite frankly does not surprise me considering the military. The military, you got technology, and you also have space industries are in this city. It is highly stable. So I like Huntsville, especially from a great single-family rental buy and hold perspective. Median home price, $87,000, and of course, your median monthly rent, $900 a month, which means, again, if you buy right, you will win in Huntsville. Great job opportunities for investors, and of course, a lot of the STEM opportunities, STEM job opportunities are in Huntsville as well. So again, keep Huntsville in mind. Do not count Alabama out of this entire single-family rental race if you want to look at buying in a different city or state in which you live. All right, Think Realty Nation, we're back. My guest today is Michael Moll, and we're talking about Reitium, his company Reitium, and how he plans to democratize real estate. A very interesting concept, and I'm excited to learn a little more. You see what I did there, Michael? Michael, welcome to the show.
Yeah, thank you so much for having me. I'm excited to be on your show and share what Reitium is doing. We really see ourselves as part of the future of real estate today, and excited to share our vision and our mission with your listeners. So thanks for having us.
Yeah, you got it. So let's go ahead and get started with that. Give us a little background. Who are you? What do you do? And what's Reitium all about?
So I'm Michael Moll. I'm the Chief Product Officer. I lead the tech team here at Reitium. And Reitium is a global real estate equity crowd investing platform and secondary trading exchange that allows anyone around the world with an internet connection to compliantly invest in income generating and appreciating real estate for as little as $100 in a way that's 100% compliant with securities regulation, earn the dividends monthly or quarterly, earn their appreciation in their shares. And when they're ready to sell their portion, they can sell it without affecting any of the other investors to someone else around the world. So we've really made a way to really streamline and democratize who gets to invest in real estate, who gets to generate wealth, and do that in a way that's more affordable than anyone has done it before.
So help me break that down a little bit, because for a lot of our new real estate investors that are starting to listen and maybe gain a little traction in the real estate investing world, whether it's buying a single family rental or a large apartment complex if you're a pro real estate investor, what does this mean for investors here stateside? And of course, I know you're based out of Vancouver, Canada. My wife was born in Vancouver, so I have a lot of ties to Vancouver now, and I visit frequently, so I'm a huge fan. What does this mean for the investing world at large?
Right. So for the investing world at large, what we're really looking at is, when we say we're talking about creating liquidity, we have a lot of real estate assets that become difficult to sell. So if you look at on the asset owner side, on the fund owner side, you might have a trophy asset say $100 million building, you're trying to liquidate that. You then only have very few people who could buy that building, and therefore they are dictating the terms of that sale. The second thing is when you look to those type of groups, there's an illiquidity discount that happens. So you're not going to be able to sell it for 100 million. You might sell it for 80, 75, even 60 million. And then on top of that, there's all the fees, the legal fees of doing the transaction itself. Now, what happens when you can break these buildings or these assets down into smaller chunks? On our platform, we talk about $100 because we really are driving down the cost so that we could break it down to $100. But some of these assets and asset owners are looking between $50, $25, $5,000. Okay. But even whatever that fraction looks like, what it really is about is now that you can have multiple investors who can come into that same deal who would never be able to come in before, both accredited institutional and retail investors. And on top of that, because now you have this big group of investors with less stake individually, they have less say in terms of how that asset could be managed or how that asset could be priced. And so then you can defend your higher price by going that way. On top of that, it's about diversification for real estate investors. You know, we traveled to 9 countries, over 30 conferences in the last year, and we listened to people who just want to get into their own market. But then you have other people who are savvy real estate investors who are like, I want exposure to new markets. Now that could be either
I'm one of them, right? Like I'm always looking at new markets. I'm always looking at new things. Quick question for you. So you mentioned that this is definitely for your accredited investors, but then also your retail investors, meaning those that are also non-accredited. For those investors that still need a little bit of a push and they need to understand how to invest really, is it potentially dangerous for them to get involved in, say, an asset class they know nothing about just because it's available to them?
Right. I think we are very cautious in terms of what deals each type of investor is allowed to see. And so that's really where our compliance engine kicks in. So as I mentioned, we have the primary crowd funding engine. We have the secondary exchange for liquidity. The third part is the compliance engine. And what this does is this checks for know your customer, anti-money laundering, all the rules of the investment deal itself. So whether it's Reg S, Reg C, Reg D, etc. And it enforces these rules as well as the accreditation. So if you're a non-accredited investor, you're only going to be allowed to invest in deals that you're eligible for under the securities law. The second thing is you're only going to be allowed to invest at a certain threshold, right? So it could be 10% of your income or $2,000, depending on your state. Now, in terms of not knowing a lot about the asset class, real estate is one of the tangible assets where people are aware, right? And so it's not like a new startup that's in biotech that they know nothing about. Right. They see real estate. They see real estate. They see how it's really driving in lots of cities, and they want to get in. Obviously, there are market cycles that need to be taken into account, but that risk assessment is taken on our side and on the side of the issuers. But it's something that people, out of all the investments, they understand that real estate is a good long-term investment. And what our job to do is just to filter to make sure that the best assets get on the platform. So whether you're an accredited or non-accredited investor, you're getting in on really great deals that have been vetted thoroughly, background checks on the actors who are pushing that issue. We have a due diligence committee that's looking at that asset or fund. And so by the time it gets to the platform, we're looking at really high grade real estate opportunities. And then finally, in terms of education, we are partnered with a lot of real estate education networks in both Canada and the United States, and we will be heavily driving education through those partners to make sure that people understand more than just the face value of, this is a real estate asset, it has dividends, it has appreciation, but we go deeper into the differences between multifamily, whether it's self-storage, REITs, etc., so people can over time get an informed decision. What we're saying, though, is don't wait 3 to 5 years learning about real estate before you get in. With our platform, you can learn and get in, and you have a practicum as you're investing, you're learning, you're growing. And because we bring that dollar amount very low, you could put $1,000 in 10 markets and track them and learn in 10 different real estate sub-asset classes, right? Yeah,
it's a really good point. I mean, you bring up a couple of interesting points. One is the education. 2 is also, of course, the due diligence here. And that's really important. If you're a new investor or even a pro, if you don't know who the jockey is, you have a lot of lenders in the debt space primarily. They'll say, well, I'm really betting on the horse. And the horse is the piece of real estate, right? They'll lend to a certain valuation, then they'll say, all right, well, if you fail, I'm going to take back the property and it's mine and I'm going to have to do it anyway. The challenge with that is if you're a passive investor, if you truly care about just this mailbox money concept, what ends up happening is now you're going to have to operate the deal, and all of this could have been prevented in the beginning if you are looking for more of a passive income opportunity for really identifying and really getting into the nitty-gritty to understand who this operator is. And Michael, you're telling me you're doing background checks and things like that, which is really good. You don't see a lot of platforms doing that because they'll say, well, hey, we're really just listing the asset, listing the operator, and it's your job to do all of the necessary due diligence. They might have a star rating or they might have like a category A, B, and C rating, but it seems like what you're doing is a lot more in depth, especially if you have funds that are being listed on your site as well. So I think that's pretty neat. As a new investor, I'm definitely concerned about markets, right? And where I should be putting my money, in which asset class. Where do you suggest a new investor start? Single family, multifamily, self-storage, commercial? Any picks?
So it really just depends market by market, right? So we have a group of 600 realtors, high performing all across North America, who are sending us deals, as well as family offices, high net worth individuals, investment funds. And what we're looking at, it really just depends on the market, right? So if you look at Arizona, if you look at Texas, single family, multifamily is really doing well, and we have a lot of projects down there. But then in the Midwest, you're looking at self-storage. Then you're looking at detached family houses. So it just depends which region of the country you're in. And so we can't say just choose this type of asset class. It has to go city specific and asset class and trends. And so on our platform, you'll be able to look across those asset classes. You'll be able to search by return on investment.
Yeah.
You'll be able to search by city, and then you'll see the case for each of those investments, for each of those cities detailed out, and then you can make the decision.
That's smart. When you talk about, you know what, I had a question for you, but I'm going to ask that in a second. You're in Canada, you're in Vancouver, and you're looking at opportunities here in the United States. Are you finding that there are a lot of Canadian investors that are not finding opportunities in Canada that are looking at the United States more so now than, say, maybe 6 months ago or a year ago? Or are you, like, there has to be a reason why Reitium is really involved in the U.S. market, obviously, right?
Yeah, definitely. So the way that we see it actually is, we were at a seminar that really hit the nail on the head. And so you have outside of Canada and North America, you have like, let's say 80% of the world's wealth, but half of that wealth wants to be in the North American markets.
Yes.
And so we're talking about people in Asia and Africa and Europe. Their safe markets for real estate and for wealth preservation and for growth is the North American continent. So our goal is to digitize real estate offerings in Canada and United States and bring global investors here. And as we said, as we traveled around the world, we really validated that as we've seen the way other markets and our partners are playing out. So it's not just Canadians wanting to be in the United States, it's the whole world really wanting to own real estate in the United States because it has one of the best judicial systems, private property laws, etc. Right? So really, right. we see that, and our platform, a lot of crowdfunding platforms can't facilitate global investors. And how does the money move? How do documents get shared?
That's right.
How does compliance get enforced? So our blockchain handles all three of those things, right? So we're able to take money from whether it's mobile money in Africa, like M-Pesa in Kenya, or Alipay or WeChat Pay or cryptocurrency. We're able to bring all those currencies in, change them into Canadian or US dollars. That's the money that goes into the escrow account. So the asset owner doesn't have to deal with any fluctuations, but it's very, very efficient for someone to send Bitcoin from Angola than it is to send Western Union. So we just support all those different methods. But on top of that, we track all those documents in distributed blockchain. So it doesn't matter which part of the world you're in, which counterparty is involved in the deal. Everybody has exposure to who's invested, how much have they invested, were they allowed to invest, how much should they hold, and all these rules get automated. So we make it easier for an asset owner to sell to a global crowd in a compliant way, just as though they were selling just to a few people in their own city. And that advantage now unlocks what we call $1 trillion of sleeping capital. So this is millennials, seniors, people in the developing world who have anywhere between $100,000 and $25,000 saved. But that's not enough to get a down payment in any of the top 20 major cities.
Right.
But it's definitely enough to pool that money and give it to the best asset managers, fund managers in the world to really drive it home. And that's a big point that we like to make, is that the assets, the funds, the deals on Reitium are going to be the best in the world. Like, we've really curated out of $830 million of assets that we brought in, just some of the best deals. And so these are deals that would not have been accessible only to a few small group of people. But because of our ease and efficiency of onboarding this capital, all we're changing is who brings the capital.
That's right.
We're not changing the operations and the stack of excellent management.
Right? Yeah, and I think as the internet becomes more available to the rest of the world and to countries that have never had internet before, it's a game changer. So I'm completely with you. I love blockchain. I love the technology. I think it's going to do wonders for the real estate world. So keep up the good work there. I think it's the Bitcoin thing that I have an issue with. So I'm still like, I don't understand that yet. When it comes to millennials, last question for you, and then we got to wrap up here. When it comes to millennials and just being able to find all these micro investors, is that a pretty powerful thing for your platform, Reitium, because you can attract both your accredited investors and some millennials, maybe the majority of millennials, depending on the money condition they're in, may or may not also be accredited? I'm assuming that just offers more money to your platform for opportunities that are currently there.
Exactly. And we coined real estate for everyone. We really believe in that. We believe in diversity and inclusivity, and we see what that can do for the markets and for the deals that we want to raise. Yep. I think bringing these two groups into similar deals, or at least into a platform where they can be filtered into deals that they need, is really going to open it up. I mean, one of the things that my co-founder Thomas, one of the stories he's really attached to, is when you look at what Obama did with his fundraising before, George Bush had raised, I think, the most ever for a president, but his average check size was, way above, say, $20,000. Yeah. Obama brought down his average donation to about $200, and he doubled any campaign donations of any president before. So I think really when we look at the crowd is out there, they're waiting. There are 4 billion smartphones enabled on the platform around the world, with better technology than what we went to the moon with. The last decade, like, financial inclusion has been huge. People are getting, that's right, now have wallets, now have things. And the next stage of financial inclusion is assets and investments. Yeah. And so that's what we're really leading the charge with. And it's very exciting. Every day we get emails from all around the world with people's stories, why they want to invest in real estate, why they think our company is their best avenue. And we can't even write the scripts that they're sending to us. So we know that we've really connected with a group here, and our aim is to have millions of users in the next 2 years here.
Wonderful. Well, congratulations on all of your success so far. Michael Moll with Reitium, I appreciate your time today. What's the best way to get in touch with you if I'm an investor or if I have an opportunity to put on your platform?
Exactly. So go to reitium.com or email team@reitium.com, whether you're looking to invest in assets or you have some great assets or funds that you'd like to raise money for. Contact us. That will go to the 3 founders, and we'd love to talk to you. Abhi, thanks for having me on the show.
You got it. Michael, thank you very much. I appreciate it. Think Realty Nation. We'll be right back. This segment is brought to you by Narada Real Estate Investments, your premier source for cash flow investment property. Visit www.turnkeyrealestateinvestments.com. All right, so let's rock and roll here. Still a good amount to talk about. The 5 things, if you have turnkey rental properties, they're the 5 things that you need to know. Just 5 easy things. Number 1, consider the holding period. Number 2, fully vet these rental opportunities. Number 3, invest in quality management. Number 4, you want to gauge that long-term potential income. And of course, number 5, pay attention to the silent killer, taxes. Let's go through maybe one or two of these. You want to fully vet these rental opportunities. As a new real estate investor, you want to make sure that your buy price makes sense, that you're putting enough down. You don't just want to put down 3 or 4 or 5% and just kind of get by on the skinny. You really want to put down a considerable amount on that down payment. Why, you may ask? Well, because better skin in the game is always a good look, and quite frankly, it gives you a little bit of a buffer if and only if that market starts to slide a little bit. But if you're investing for the long term, it's always good too. For me, I like the cushion. I want to make sure that if the market does slide, I don't have to worry about it a whole lot, and I'll see increased cash flow as well. When you're looking at rental opportunities and quite frankly vetting them, you want to make sure you also have good quality property management. They need to be local. They need to have boots on ground. You want to talk to their previous clients and their current clients to see what's good about them and what's not good about them. You also want to make sure that you're using the appropriate amount of technology to streamline your business. Remember, it's a business that you're creating, not a job. So the rest of the points, I definitely agree with as well, especially when adding turnkeys to a rental portfolio. Again, to summarize, number one, you'll consider your holding period. Are you holding for a year, 5 years, 10 years, or 20? I never want to sell property, so my holding period, it's going to be as long as possible. You want to fully vet these rental opportunities. Just because there's a good deal doesn't necessarily mean that you have to buy it. Really? Is it a good deal? Really? Like 3 question marks after? Invest in quality management. Unless you're doing the management yourself, I'm 5'5" and 120 pounds wet. Do you think I'm going to manage my own properties? Probably not. I need somebody else to help me out. That's why I hire good property management. You want to gauge that long-term income potential. And then last but not least, pay attention to those taxes. Pay attention to those taxes. Let me tell you, that can be sometimes a killer if you don't do it the right way. All right, next up, let's talk about how investors can make the most money flipping houses. This is an article that my buddy Mark Ferguson from Invest for More wrote on the Forbes Real Estate Council very recently. He thought this would be a good play here. Adam Data reported that the average profit on house flips in the United States in the second quarter of 2018 was $65,520. I kind of flipped the 2 and the 5 there. So roughly about $66,000. I would say when I flip, and which isn't very often, when I flip, I'm averaging between $30,000 and $40,000 a flip. So something to consider. And I think my number is a little more accurate than the Adam Data number. Now, you have to be careful when you are flipping to really make sure your renovation numbers are on time, they're on target. Everything on your renovation happens on time. I live in the state of Atlanta, and so sometimes it can take a little extra time to get permitting, etc. done. So you want to make sure you offer that buffer of window, that small little window, whether it's an extra 4 weeks, whether it's an extra 4 months, sometimes depending on where you live, for these renovations to take place. And then, of course, to make sure that you get all of your permitting. You want to vet your contractors. If you don't have a licensed contractor, you are not going to win the game of life here. I will tell you, it can be a big, big issue. The same thing that Mark talks about in this article. You got to find good contractors. You want to buy most of your materials at major stores with managed professional accounts. Boy, there could be a really good winner here. You want to check out CBG. You want to check out Lowe's, Home Depot. Get a professional account. You'll definitely save more. Minimize the remodels on houses and choose smaller projects over huge projects. I'm with you on this. The more that you tear into a wall, guess what you're going to find? More problems. And sometimes you're going to have to do that. I get it. But you know what? If you can minimize that downside risk, minimize those projects, you can come out ahead. So what does that mean? Picking renovation projects that are a little smaller in size could be better for you, especially if it's your first one. This podcast is brought to you by Roofstock. If you're ready to buy your next investment property, then check out Roofstock, the #1 marketplace for buying and selling single-family rental homes. Featuring tenant-occupied rental properties for sale in over 20 states, Roofstock makes it easy to invest in cash-flowing real estate outside your local market. And to help you invest remotely with confidence, all properties are backed by Roofstock's industry-leading 30-day money-back guarantee. Sign up for free today to find your next cash-flowing rental property at roofstock.com/thinkrealty. Think Realty Nation, that is a wrap. That finishes out the Think Realty podcast for today. You want to get in touch? Go to thinkrealty.com. You want to listen to the podcast? Go to thinkrealty.com/podcast.